Good afternoon, everyone. Thanks very much for joining me this Tuesday afternoon. Thank you for being punctual as well. It is 1 o'clock, so that is the time that we're supposed to be starting. So let's get cracking. First of all, if you could please just put a quick note in the chat box to let me know that you can hear me, that would be much appreciated. And immediately, thank you very much. Thank you, Tim. Nice to see you again. So a little bit of housekeeping to start off with. We'll be here for roughly 45 minutes to an hour or so. We've got some content, obviously 2022 risks and opportunities that we're going to talk about today. But also I'm going to answer your questions. So if you've got any questions, then you can either keep your question for the end, or you can type your question out in the Q&A box. So please use the Q&A box for your questions. And if it's a question that can be answered quickly and efficiently, then I've got Monica, my glamorous assistant, who is here with me today, and she can answer your questions immediately rather than waiting for me at the end, just to make sure that everybody gets the answers that they need. If it's a question that everybody will benefit from the answer from, then we'll save it to the end and we'll make sure that we give the answer in front of everybody. But that's that little bit of housekeeping. If you've got any questions, please put them in the Q&A box. That allows us to manage them to make sure that everybody gets answers. Thank you. So without further ado, let's crack on. So first of all, a little bit about me and why am I talking to you today about such a broad topic as to property in an entire year, and where you should be looking and what you should be avoiding during that time. So my name is Chris Kirkwood. I'm the franchise director here at Sourced. Before I joined Sourced, I founded, run and grown multiple businesses in different business sectors. So I'm quite experienced at building a business. All of the businesses, funnily enough, that I've grown, I only really sort of realized this the other day, all the businesses that I've grown, I've built from absolutely nothing. So no trading history, not bought stuff, absolutely nothing going on with that business. And I've built the business up from scratch. Since being part of Sourced, we have actually acquired other trading businesses. So got experience of both of those kinds of startup. I've been involved in property for over 10 years now. I started doing it on my own. Like a lot of people, you just know that property is the thing that you want to get into. You just know that people can make a lot of money out of property. And when I was building these businesses, I started to create surplus cash. And this cash was just sitting there in the bank. And that was eating away at me, because why would I have money sitting in the bank when I could earn more from doing something with it? So I started investing in property, and probably the same as the majority of people out there, when I started investing in property, I had no idea what I was doing. I just wanted to own stuff. So I started buying property and adding to my portfolio without really understanding about returns, without really understanding how to generate better returns for properties. And over a period of time, I've taught myself to maximize the amount of money that I'm making from property. So from a personal point of view, I've been involved in deals from about 55 grand, which was, I think, Fram Street in Manchester, in Salford in Manchester, and up to involvement with Sourced up to GDVs of 150 million pounds. So I've got a broad scope of properties that I've been involved with, and then coming down to different strategies as well, because the way that you structure your property deal could often be the difference between success and failure. The way that you can use your imagination and use your knowledge of contracts and finance to create a solution that is going to produce something that will return the kind of numbers that you're looking for, is completely down to you. Now, there's lots of training courses out there that will tell you, with HMOs you do this, and with commercial conversions you do this, and with lease options you do this. But really, what we try to encourage our franchisees to have is have an overall knowledge of all of those strategies, and then they're able to apply them to the right situation. So they might learn something about the way that you can maximize the demand for a serviced accommodation unit, but then they can apply that to something else. They might learn about lease options because they're looking at securing property, but then they can apply that lease option to another situation. So we try and give our franchisees as much information as we possibly can, so that they can then apply it to the right situation, which means that they're more likely to make money. And now what I do as the franchise director is I build the franchise package and oversee the delivery of that franchise package, which we'll talk about a little bit later at the end. So when you look at Sourced, we've got 4 different colors on our website. And so you might be thinking, how does all of that fit together? What exactly am I looking at here when I look at the 4 different areas of sourced? Well, on the right-hand side, you can see the green area, which is the franchise side. You'll be aware of the franchise side. You've probably had the prospectus from us already, and that is a good description of the franchise. We are here to help our franchisees make money out of property. We're not prescriptive. We don't tell them what strategy to follow. We don't tell them the way that they have to make money. If there's a way of making money out of property, we can assist them doing that with education, with support, and with funding. Coming onto the blue section, that's where the funding comes from. So that's source capital. So we can fund our franchisees deals. In fact, we only fund our franchisees deals. We don't offer funding to anybody outside of the franchise business. And that's a peer-to-peer, directly authorized, FCA regulated industry business. Sorry. We've got source developments. Now, source developments, they're the developments that we're doing at HQ. We've got developments going on around the country. In fact, our MD is down in the Southwest today, just overseeing a valuation surveyor looking at one of our buildings. £12,000 it's going to cost us for that valuation survey, which is a huge amount of money, but that's because it's a huge building. So the development stuff is the stuff that we're doing at HQ. And then source property. If you click on property, you'll see the properties that are advertised by our franchisees. So if you're looking for property because you don't have the time to go and find it yourself, click on property. It will either take you through to our app, or it will give you lots of education, lots of information and education for you to expand your knowledge to make good decisions when you select a property from our app. Again, our app, only our franchisees can advertise properties on our app. So if you are looking for properties, head over to the Sourced Investment Property app, either on Android or on Apple, and you get notifications every single morning of new properties that are put on that day. So every day we have new properties going onto that app. So if you're looking for properties, that is a great place to start. So Sourced is a business so far. We only started in 2017, so we haven't been around for a huge amount of time, just over 4 years old now. The franchise model started in September that year after an initial sort of consultation and a lot of work in order to build up the resources, build up the documents and everything that we needed in order to deliver the franchise business to an individual. In August 2018, we received FCA approval to operate our peer-to-peer platform, and that was through another company who is directly FCA approved, which is the standard way to build an FCA approval company. In October 2018, we hit 40 franchisees. So just within a year, we were already up to 40 franchisees, and that's because what we offer is very desirable. Not only do we offer the education, but we also offer the support. We have a full-time dedicated support team, making sure not only do you understand the training that you've had, but also that you put it into practice. Because the majority of people, when they learn something, the information isn't what holds them back from delivering that information. It's something within themselves, some kind of self-doubt, some kind of lack of understanding of the information, or potentially just feeling like they need to know more before they put it into practice. Well, in most cases, that isn't the case. And the support team are there to help people put their best foot forward and get on with making money out of property. In February 2019, we JV'd on a £150 million development, which is in Manchester. And then we were registered for ISA and pension funding through our Source Capital arm of our business. January 2020, we were then raising £1 million a month through Source Capital to fund our franchisees deals. By April 2020, we had an active development pipeline of about 8 live projects. In fact, I'm going to show you a picture of one that we just completed on yesterday. And then by March 2021, we hit 150 franchisees. So again, it's a very popular, very sought after product that we have here, because what we do is not only make sure that you understand, but make sure that you apply. In October 2021, we launched a property app for our franchisees so they could connect and communicate with their investors much easier, much more efficiently. And in November 2021, we went through a contract to acquire a tech company. That tech company was brought on board in order to improve all of our background tech and our front of house tech, which is, again, specifically for our franchisees. And then in December 2021, we finally gained a direct FCA approval from the FCA. So instead of being approved via another company, we're now directly approved through the FCA. So we've not only have we been running Source for the last 4 years, but we've been in property for a long time. The top team at Source, the directors, have been in property for an awfully long time. Last year was quite unique in everything that was going on in the world, not only in property. But certainly if you look at what happened last year, you can see some patterns, and you can put yourself in a stronger position to be able to have better predictions for what you think is going to happen next year, whether you should be spending your money really early on in the year, whether you should be spending your money later on in the year and being a little bit more patient with your investing. Exactly what is going to happen next year, and how can we look at last year to help us predict that a little bit better? Well, first of all, I mean, not only in 2021, but I would also say in 2020, experts were just continually getting it wrong, because one of the things that happens these days is that you get an awful lot of experts, don't you? You get an awful lot of people who will go onto the news, or they'll write a blog, or they'll put a video on YouTube about. In fact, I often have this conversation with my wife that if you have an opinion, you'll be able to go online and you'll be able to find somebody else that has that opinion as well. Whether that opinion is look at Flat Earth, for example, but whether that opinion is completely wrong, you'll be able to find somebody else to justify why you have that opinion. So there's lots of experts out there, and a lot of the experts that were on the broadcast media were getting predictions wrong in property, especially when coronavirus first hit. I know that was in 2020, but that sort of prediction of what was going to happen with coronavirus in 2020 and getting it wrong and saying that the market was going to crash immediately, obviously that didn't happen. But then every single thing that's happened, every single variant of coronavirus that we've had, still the same people come out and say, oh, well, no, this is the one, Omicron came out, and this is the one that's going to crash the market. And yet here we are in exactly the same position as we were 6 months ago, with the market still absolutely red hot. So in 2021, experts continued to get predictions in property incorrect. And in fact, in 2021, we saw the highest mortgage activity since 2006. Now, for some of you that are a little bit more aware of what was happening in 2006, that might start to ring some alarm bells, because one part of the problem in 2006, obviously 2006 is just before 2007, 2008, the credit crunch. In 2006, there was a lot of mortgage activity because lending was very, very easy. In comparison to how it is today, lending was far easier. In fact, you could get 105, 110, 120% mortgages in 2006. And part of that offering was why the credit crunch happened, because not only were those 120% mortgages available, but also they were being lent to the wrong people. And therefore they went into default, and that created a huge amount of problem when the valuation of the property hadn't gone up. So we've seen the highest mortgage activity since 2006. However, we're nowhere near the same situation. We're not in the same boat, and lending isn't as easy as it was in 2006. So I certainly don't think that just looking at the mortgage activity in 2006 compared to 2021 should be an indication that a crash is to come. In fact, the regulation of the mortgage market is so much stronger and so much tighter now that amount of activity, I don't think, is really a warning sign at all. But what it does tell us is that the property market, it's an indicator that the property market has been incredibly hot over the last year. It's been a huge amount of activity in the last year despite coronavirus. Now, part of the reason for that huge amount of activity were because of the government schemes. So there's been a few government schemes that have been launched. For example, the mortgage guarantee scheme, which would guarantee up to 95% mortgages. And then obviously the big one that you've heard about is SDLT. So there was a reduction in SDLT if people were moving, and that was put into place in order to fire up the property market, and it absolutely did. There was a huge amount of activity surrounding the SDLT reduction. to the point again where the experts come out towards the end of SDLT and say, oh, well, this is the end. This will be the end of the property market for the foreseeable future. You know, nothing is going to, as soon as the SDLT advantage goes, then everybody's going to withdraw and there's going to be no more transactions. Now, there was a dip, absolutely 100% there was a dip as soon as the stamp duty came back to the normal level. However, after a couple of months' time, the property market continues to get to be extremely hot, because essentially the supply and demand was still there, right? The demand was still there because there were lots of people that wanted properties, and the supply wasn't there as much because there were fewer people putting their properties onto the market. So it was a very, very competitive place to be through 2021. So lenders did relax terms, but that's all relative, because we certainly weren't going up to the same levels as 120% mortgages. But over 2021, lenders relaxed terms. What happened over 2021? And in fact, you have to look back at 2020 to start this off. But when coronavirus first hit, lenders immediately made the terms more difficult for people to borrow. So lenders are probably the most cautious people within the property sector. And as soon as something changes, you can watch them to see the reaction that the rest of the market will follow. So in 2020, when coronavirus first really took off, the lenders started making it more difficult to lend. And the reason that they were doing that was to cover their own bases. Because if they make it more difficult to lend, if there is a crash and property values come down by 20%, they were making sure that they were covered to still recover the loans that they put out on the property. So in 2020, lenders made it more difficult to borrow money. And over 2021, as they realized that coronavirus wasn't going to have the impact that a lot of experts were saying, they then started to relax their lending terms. And the lending terms got to the same level, and then actually have surpassed the level of lending before coronavirus happened. Not only that, but interest rates have been incredibly low through coronavirus, making money very cheap to borrow, the cheapest in history at 0.1%. So lenders were relaxing their terms, interest rates were low, and therefore a lot of people were taking advantage of that to move house. And that's why there were so many people in the market looking for a new place to live. You then have the restrictions of coronavirus and people assessing their houses much more thoroughly, because people spent more time in their houses than they ever had. On all the lockdowns that we had, people were spending a huge amount of time in their houses. And if it just wasn't quite big enough to have, you know, the 4 bedrooms for the kids, the big downstairs area, and the office, the home office, to work from home occasionally, then it was a problem. And so people were looking to upsize, especially when lending was relaxed and mortgage rates were low. All that being said, the market has risen by 10.2% over, as an average, over 2021. And that is the biggest individual one-year rise this century, which is a huge increase. Now, for us, what do we see happening in 2022? Well, let's have a look at that in just a second. But that rise of 10% in 1 year has made a huge difference to lots of people, lots of valuations, lots of portfolios, lots of people, especially with money lending being so low. The interesting thing, and I only found this out last week actually, the interesting thing is that this growth hasn't been unilateral. It hasn't been 10% across the board. So if I gave you 3 percentage increases in valuations across the country, you might have different ideas as to where they came from. So we've got 2.6%, we've got 6.9%, and we've got 16.5%. Now, where do you think, if you were going to make a guess, where do you think that those prices increased by that amount? So for me, and I don't know whether this is just because I've been involved in property for a long time, but I always look at the biggest number and I think, well, it's probably somewhere in the southeast, probably London, because there's historically been so much interest in London. But actually, the price has increased as an average of 2.6% in London. So London was the smallest increase out of those 3 numbers. 6.9% was in the Midlands. And at one point last year, an increase of 16.5% was in Wales. So of these areas that traditionally haven't been quite as high capital growth as other areas, especially some areas of South Wales, they really benefited last year. And it's helped to level out the market a little bit. You know, the places that were already incredibly sky high, like London, didn't go up that much further. But the places that were more modestly priced went up quite significantly. So we're not quite working off a straight line just yet, but the prices of the lower price stock certainly rose at a higher rate than the higher price stock. So what can we expect in 2022? What is going to happen? Well, first of all, everybody heard about the stamp duty coming to an end, but that wasn't the only government scheme. There was the mortgage guarantee scheme as well, and that is still running until December 2022. So if that's something that you can take advantage of because you meet the terms and conditions of the mortgage guarantee scheme, you need to be aware that that is still going on. So that is going to continue until 2022. And that will absolutely have an effect on the market over the next 12 months. Interest rates are going to rise. In fact, we've already seen them rise from 0.1 to 0.25%. So interest rates are going to rise, and that is going to make borrowing more expensive. That said, if you have stock at the moment, you are still able to get very, very low long-term fixed mortgage products. I think I saw NatWest, was it yesterday or the day before? They still have a 1.4, 1.5% 5-year fixed. Now, that might be, if you're looking for some degree of certainty, some degree of predictability in your portfolio, that might be a great idea for you to jump on now, because interest rates currently remain low. However, inflation is currently very, very high. I think that's, well, we're going to get to that slide in just a minute. But with inflation high, the way that inflation is usually controlled is by interest rates. So I think it's absolutely predictable that the interest rates are going to go up. And if you have a variable rate mortgage or a variable rate portfolio, that might hit you a lot harder than somebody that's fixed their portfolio. So that's something that is absolutely worth you considering when you're working out the overall management of your portfolio. Now, for us at Sourced, within our HQ team, we've got Source Capital. The interest rates that they charge our franchisees will stay the same over 2022. We don't make any predictions whatsoever to increase the rates that the franchisees are going to be paying in order to borrow money from Source Capital. So you've probably heard quite a lot, it being winter, utilities are always in the headlines. So you've probably heard quite a lot about utility prices over this winter and how much they're increasing. But also the cost of living is going up because a lot of businesses have shut down, a lot of supply chain businesses have shut down, which means that there is still demand for those products, but now the supply isn't there. So we're not able to get these products because the majority of stuff that we consume, we import. And if the logistics companies are not doing what they need to do, then the number of those products in the country goes down, therefore the demand goes up, and therefore the prices go up, which is why we're currently at an inflation rate of about 5.1%. So like I said, traditionally that is controlled by raising the interest rates. So I think you can definitely see that there's going to be a correlation between those two things. However, an inflation rate of 5.1%, there are mitigating circumstances for that 5.1%. So I don't think you're going to see a knee-jerk, very fast rise in interest rates to deal with that 5.1%. The mitigating circumstances around that 5% are around Brexit and around coronavirus. So I think the government will be quite patient, and the Bank of England will be quite patient at allowing those interest rates to come back down before, allowing that inflation to come back down before they do anything drastic with interest rates. So I think if you're looking at, by the end of the year, interest rates to be no higher than 1.5%, for example, I think that's realistic. And that gives you some kind of degree of certainty in order for your planning. If interest rates at the end of the year, if inflation at the end of the year is still very high, then I think they might consider doing something more drastic. But they'll allow this year to sort of re-equilibrate. I did science, I should be able to say words like that, until they start doing anything too drastic there. Now, one of the companies that I go to sort of see what they're saying about the market and what their predictions are going to be for growth over a coming period of time is the Halifax. They've been doing this for an awfully long time, and I think they're usually quite sensible about their predictions. And Halifax are predicting that across the UK, across the board, we should see growth of about between 0 to 2% across 2022. I think that's absolutely modest. I don't think you're really going to see much of a difference in prices across the whole of the year, even with some government incentive schemes still out there, still operating and still helping people to buy houses. But I think there's going to be, I think that the interest rates, inflation, and basic overall squeeze on people's budgets is going to put a lot of people off purchasing property right now, even though when you look at the supply and demand seesaw, right now is a great time to buy property. Another issue that we have obviously heard of, and again, same issue, same supply chain, same problem as the logistics companies not being able to deliver products, but material costs have risen very dramatically over the past 18 months or so. Now in 2022, I think that those costs, just as with all costs, as logistics companies come back in and the world starts to return to something of a normal state, then those costs are going to come down. Already in the last couple of months, we've seen that some materials cost for building has sort of plateaued, if not gone down ever so slightly. So that sort of upward exponential curve that we seem to be having in 2021 of prices going through the roof, that has certainly slowed down. And I think that will continue to slow down to allow you to a much more predictable market in which to understand what your costs are going to be for when you're putting a project together. So what are the practical implications for you? So supply will remain low. I don't think there's going to be a huge rush of people putting their property onto the market. But importantly, where in the past the demand has been very, very high, going forward, demand, I think, is going to decrease. And the reason that the demand is going to decrease is because of inflation, because of costs, and because of interest rates. That's basically just going to encourage people to look at other things, maybe just keep their money in their pockets instead of spending it on property. Now that's going to cool down the market. That's going to rebalance the supply and demand seesaw, and that's going to cool down the market. And with a cooler market, it means that properties are going to be on the market longer, and vendors are going to be more likely to accept offers. I don't think we're going to see as much in 2022 of properties that have been listed on a Monday morning at 8 o'clock and they're sold by midday. I just don't think that's going to happen. I don't think the market's going to continue at that pace. It's all going to cool down, which means that people are going to be more open to having conversations about properties. So you're not going to get that one property that the estate agent puts on the market and 50 people turn up to the open house viewing. I don't think the numbers are going to be the same as that this year. I think it's going to cool down. I think you're going to have more opportunities out there, so long as you remain consistent with building your relationship with the people that control the properties, and they are the estate agents. One of the issues that we've seen over the last couple of years has been justifying a GDV when the market is moving. You know, when you're putting a project together and you're trying to analyze what the GDV is going to be, it's very difficult to say to somebody what the GDV is going to be in a market that is on an upward trend of 10% in a year. Because if you're looking at a two-year deal or an 18-month deal, well, you're going to be out by 15 or 20% if the market continues to move at that pace. Now, Source Capital, like I said, is going to be lending to our franchisees at the same rate, which is a real opportunity for them. And the reason that that's important when predicting the GDV is because Source Capital actually lend to our franchisees based on the GDV. Franchisees can borrow up to 70% of the GDV. So if you're 20% out, that means that your 70% that you can potentially borrow from Source Capital would also be out, and you might not be able to borrow as much as you want to. But certainly with a cooler market, if it's going to increase by between 0 to 2% in the next year, that means it's going to be much more predictable for you to understand what your overall project costs are going to be. And therefore, putting the project together and then delivering it for the same price is going to be much more achievable for you. One of the other things that we are continually seeing is that the commercial property demand remains low, despite the fact that last year the government put this phenomenal permitted development right in to allow you to convert PD, which is called PDMR, which allows you to convert permitted development properties within use class E into C3 with some different regulations around each kind of property. But essentially, you can convert something from use class E into C3, which is residential. So if you find commercial buildings, which just so happen to be very low in demand at the moment, because a lot of businesses have moved to home working, or a lot of businesses have restructured the way that they manage their costs, and they've got rid of their building. And so there's a lot of commercial properties that are vacant and open to some kind of conversion. There's still a lot of commercial buildings out there that are absolutely rife for conversion. We have a huge amount of properties within our portfolio here at HQ, and I'd say probably about 90% of them are commercial buildings that we're converting into residential, using permitted development in order to do so. It's a huge opportunity, and I would very strongly recommend that you spend some time understanding, getting to know your commercial estate agents, understanding what the PDMR is, and what you can be doing to find that kind of property in order to convert it into residential, because it's a huge opportunity at the moment. That being said, with the stuff that we're doing, what we're then also seeing is that the rental market has remained incredibly strong. So with all of the properties that we're building out at the moment, our long-term objective is to keep hold of those properties and rent them out. So we've just completed something in Hull, which is a conversion of a big office building into 12 separate flats, and those flats are now full, and that's creating us a great return. Same in different parts of the country. The rental market is very, very strong. So if you are looking at buying something, converting it, and then holding it for the long term, the rental market does certainly seem to be holding up in order to give you the return that you're looking for when you're first doing your calculations. Now, what we do with our guys is we encourage them to set their goals at this time of year, and the support team will sit down with them, meet them on Zoom, whatever is necessary, in order to write out their goals, so that the support team can then hold that franchisee accountable for the rest of the year. Now, I would strongly recommend that you do exactly the same thing. But when you're setting your goals, a lot of people will say that they're going to set goals, and then either they never do, or they do it in a way that doesn't actually help them. The way that we set goals, and the way that I would encourage you to set goals, let me just go back, is to come up with that one big goal that you want to achieve by the end of next year, and then work it backwards from there. Work it backwards to the point where you work out, well, if I need to be there in 12 months, where do I need to be in 6 months? And if I need to be there in 6 months, where do I need to be in 3 months? And if I'm aiming for that in 3 months, where do I need to be in 1 month? And then you work it back weekly, and you find out, you write down, and you map out exactly what you should be doing from a week by week basis in order to deliver that 12-month goal at the end of the year. I would strongly recommend that you do exactly that as well. It's a great time. I know it's an arbitrary change of date in the calendar. However, it's a nice metric to start you off, to then see where you can get to at the end of the 12 months. Before you do that, though, what I would seriously consider is reviewing 2021 and avoid making the same mistakes. So you might have written your goals badly at the start of 2021, and therefore you didn't follow them through. You sort of gave up about them, put them to the back of the desk, didn't really look at them again. If that didn't work, don't do the same thing again. Blow your goals up onto an A3 sheet of paper and stick it right in front of you at the desk, so you cannot ignore it, for example. If you made mistakes by not being consistent with estate agents, then don't do the same thing again. Make sure that you're consistent. Learn from the mistakes that you've made. Don't just get motivated. Start doing something, and then make the same mistake that you did last year. I saw a great quote on my phone the other day, which said something like, "Motivation is temporary. Discipline lasts." I love that quote. That's absolutely fantastic, because it's not about how you feel about doing it. You've got to feel motivated to do it. Well, nobody cares whether you feel motivated to do it. If you've got the discipline to keep on doing it, then that's the important thing, because that actually gets the job done. So this is the goal setting and planning and accountability document that we give out to our franchisees. And this is just a breakdown of what they have to do. And our goals are set in exactly the same way. So they come up with that big 12-month goal, and then they work it backwards to see what they should be doing from one week to the next. And then this is a weekly tracker. So we give them the tools to track what they're doing from one week to the next. And they can use that with their support person if they wish to. So they can track exactly what they're doing from one week to the next and marry that up against the goals that they'd set themselves to make sure they're doing exactly the same stuff to hit those metrics. Now, some of our franchisees, we're not prescriptive, like I said to you at the beginning, with our franchisees as to what strategy they follow. So this is Shahid, for example. He does serviced accommodation, and Shahid sells a huge number of serviced accommodation deals in and around, around the country, but predominantly in Manchester. Now, you might think that over the last couple of years, serviced accommodation has taken a real hit, and you would be 100% right. But what Shahid has done is he's readied himself for the market getting back to the place where he knows it's going to be. And now he's in a great position as serviced accommodation becomes more popular to then put his foot on the gas and get to the position where he was before. For example, he's sold 22 serviced accommodation deals just in January of 2020, with fees of around £3,000, £4,000 or £5,000 per deal. You can see that that's a significant amount of money that he's making by being part of Source. You can also see this is James, and James was a builder before he joined Source, so he knows what he's talking about when it comes to new build constructions. This is a property that James has built and sold on. He's borrowed 3 times from Source Capital already in order to fund his projects. Now, what you might do when you're in property, those two guys are 2 great examples. Shahid is active in property all the time. Now, he might come across a deal like the kind of deal that James would have just built out. He would have bought it and built it out himself. But Shahid might look at that and think, well, actually, I don't know how to do that kind of deal, but I am still interested in learning about it and making the profit off it. So how can I do that? How can I sort of be involved in a project, but not have all of the liability on myself for the project? Well, we actually work with our franchisees to come up with a solution for that. And what we do is we joint venture with them. So we've got teams in-house of quantity surveyors and project managers and pre-contracts managers and site managers. So what we'll do is we'll take that project on, we'll joint own it with the franchisee, and we'll share the profit between us. And then we'll manage that project, and that franchisee can be as involved or not as they wish to be. So if they want to learn as much as possible, they can be there as frequently as they want to understand exactly what's going on. We'll involve them through the architecture, the planning, whatever is happening at the beginning, so that they can learn while they're still delivering their, like in Shahid's example, while he's still delivering that serviced accommodation stuff. So they get to share their risk with us, they get to benefit from our experience, and we can give them up to 100% funding for that, because if they need any costs going into it up front, because we're sharing the profit, we would consider putting those costs in if the deal is a good one. This is exactly what Chris did. Chris is our franchisee from Bournemouth. He found this office building. He secured it for £875,000. We joint ventured with him. We got the valuation of the building up to 2.2 million, and we made a huge amount of profit from that building. Chris was involved in parts of that construction, and in parts of that construction, he was in Romania. I think he was in Romania for something like 4 months because he was spending time with his wife's family. So that suited his lifestyle perfectly, but he still made money at the back end of that project. This is the one that we've just sold, actually. Sorry, not just completed on. So just yesterday, we completed on this property. This is another conversion, very similar. You can see it's got a retail unit at the bottom, and it's got residential areas above. And then we're going to convert that into 14 apartments, and that's in Hull. Purchase price for this one was £460,000. That completed yesterday. So we raised the money through Source Capital. That completed, and the construction starts next week. And that's with our franchisee from Humber, Jason. Oh, there you go, GDV of 2.2 million. So if you didn't want a JV with us at HQ, how can we teach you? How can we give you the knowledge in order to do that kind of project yourself? Well, it's all about building up to that kind of project. We'll train you on flips. We'll train you on rent to rent. We'll train you on whatever is necessary for you right there and then. It might be that you need to work on your cash flow, at which case we've got the cash flow training for you to then take advantage of, to build your cash flow, to then move up onto the next strategy. And that might be, once you've created a surplus amount of income, that might be for flips and refurbs, for example, or it might be something slightly bigger, like a small commercial conversion. And then as you work up and work up and work up, you can take the different courses that we offer. So we've got commercial conversions training, we've got new build training. I just had a conversation with a builder last week who's going to come in and train our franchisees from a builder's perspective on doing large refurb projects. So we've got a huge amount of training, not only in person, but also online, that you can take advantage of in order to find a deal, structure that deal in the best possible way that you can, and then make money from that deal. So we've got a huge network across the country, over 150 franchisees who are all very, very vocal, very active, very helpful within the WhatsApp groups and within the Facebook groups that we have that is exclusive to our franchisees. We put on events. So we've got an event just on Thursday of this week, actually, which is a social event for the franchisees to get together after work and just mingle, just learn from each other's experience. We've also got support days that we put on regularly. And again, that's a great opportunity for the franchisees to get to know each other and learn from each other. Like I said to you, Source Capital can fund our projects, and they can actually fund up to 100% of the purchase price and the refurb cost of our franchisees projects, which in general terms is more money than they can borrow from almost anybody else that we've heard of at such low rates. We also send our franchisees leads, so property leads. So we have the tech company that I said that we'd bought in November. That tech company has now come on board, and we're working very, very closely with the guys that we'd brought on board. And we're working with some of the products that they had previously that were open to the market. We're making them exclusive to our franchisees, and we're analyzing property leads in a way that nobody else on the market does. So we're analyzing them, making sure that they're as likely to work as possible, and then passing them through to our franchisees to convert. And that's all included as part of their fee. We also have over 100,000 registered investors who are either on our mailing lists or registered to our app. So if our franchisees, if their main strategy to start off with is deal sourcing and trading, then we've got a huge database of people that are looking to purchase. And we sell deals every single week to this database of registered investors. So if you're looking at training for 2022, our 2022 training schedule is live. The next induction day that we have actually is at the end of this month, and then we run them every 2 months. So if you missed out on it at the end of this month, then you'd have to wait until March before you were able to start up with us. The training is, while you have to come onto the induction training, the rest of the training days are actually not mandatory. So you can pick and choose the training days that suit the strategy that you're following. That's completely up to you, and probably going to be decided between you and your support person. So let's have a look at the package and how that starts up. When you first sign up with us, it's £12,500 plus VAT, and you get obviously the national branding. You get your access to your support person. You get access to joint ventures. You get access to our peer-to-peer lending platform to fund your deals for you. You obviously get the help and support and community of the other franchisees. You get access to the deal calculators and the CRMs, and the compliance training and the phone app, and the in-person training events for the first year. We also have a sales team. If you're good at finding properties, but you're not so good at selling the properties, we'll have a sales team in place that can actually sell those properties for you, and you'll work that as a commission split. If finding the properties absolutely suits you down to the ground, but managing those investors that come through to you and answering their questions and organizing that process isn't quite your thing, then we'll have a sales team in place in order to do that for you. There's then a license fee, which is £245 per month plus VAT, and that will get you a number of leads within your region. You'll have access to your support person and the tier system. So we have a very structured way that support person gives you support and how frequently they should be contacting you. You know, I think when you first start, you've got something like 3 touch points every single week that the support person needs to make sure that they're catching up with you to make sure that you're doing the right things from a week-to-week basis. You've then got support days and implementation days, and lots of small group activities in your local area. You've got access to the online training. So all of our training courses are available online that you can get at any point, so that you don't have to wait for the course to happen, or you don't have to come to Warrington to take that course. You get your email, your legal documents, you get access to auction sales, help with the due diligence from your support person, the tier system, like I said, about marketing support from the marketing team, and lots of other resources. On top of that, if you find yourself wanting different kind of products, we then have a list of different products that you can jump into and jump out of as you see fit. So if you wanted, I don't know, some leaflets printing, you can go onto that, go to the marketing team, you can order those leaflets and pay an additional fee because they're specifically for you. If you want to use the phone app after year 1, then there'll be a small fee for that service to use the phone app after year 1. The same with the deal calculator, the same with the CRM system. So we keep our costs as low as we possibly can for year 1 to get you up and running, to get you to the point where all of these services that we provide for you will then jump in and there'll be a small fee for them. With all of the products that we have on our page here, the way that they've been priced is being versus the market, and all of them are under the market value for what they're giving to each of our franchisees. So for example, with Land Insight, the only reason that we can roll Land Insight out to our franchisees is that they've given us a 50% discount. With Loop, for you guys that are estate agents, you've probably heard of Loop, but we've got a 30% discount on Loop. So anything that we have available to our franchisee comes at a significant discount in relation to the open market. We mentioned auctions, and we have an affiliation with SDL Auctions who come in and they take part of our induction training. We have a lot of franchisees that use SDL Auctions because not only are they they take care of the whole process for the franchisee. So all the franchisee has to do is find the property, but then the franchisee gets paid their 2% sourcing fee within 7 days of that auction finishing. So it's a nice, quick process for franchisees to use. Again, we've had a relationship with SDL Auctions for a number of years now. So what's the best way for franchisees to maximize their return on investment of becoming part of the franchise business? Well, the regular activity is going to include coming to the training sessions. Even if it's something that you don't necessarily need to know right now, there is information that you'll pick up at every single training session. So attending training sessions regularly, weekly group sessions in the local areas, again, attending, meeting franchisees, building your network, getting to know people in and around your area. And aside from that, one-to-one sessions with your support person so that their support person can keep them accountable. We have a weekly webinar hosted by HQ. Being on that and understanding what's going on from a HQ perspective and what the franchisees can learn is incredibly valuable. We also release capital updates every single week so that the franchisees know what's going on from a source capital point of view. Group Zoom calls, meetings and sessions upon calendar request. So all of our franchisees have access to their support person by calendar request, so they can just book themselves into their calendar. They don't have to wait for permission to do so. Obviously, you've got decision analysis and property analysis by the support person. So getting properties through to that support person, using their experience, using using their feedback and actually moving properties forward. Again, it's all about activity. And that is the end of the presentation. So I hope that's helped you. I hope that's given you a bit of insight into what's going to happen in 2022 and how Sourced might be able to fit into that and become part of your journey. If you have got any questions, then we've got the email address on the page right now, which is franchise@sourced.co. But if you've got any questions that I can help out with right now, then feel free to put them in the Q&A box and we'll deal with them. I haven't actually been watching to see if Monica's answered any questions. But if you have got any questions, feel free to put them in the Q&A box now. We'll stay around for a couple of minutes just to see if we have got any questions. So instead of waiting around for any of the questions to get answered, I can see that a few people are just leaving. I'm getting a couple of messages of thanks for the presentation and so on and so forth. So I really appreciate your time. We've got no questions through, so at this point I'll call an end to it. If you have got any questions though, please feel free to use the email address just down there. But really appreciate your time. Thanks for spending your Tuesday afternoon with me, and I will speak to you soon. Thank you. Bye-bye.